I'm 680 News senior business editor Mike Eppel. Had some more signals today about perhaps a loss of momentum in the Canadian economy to start this year, primarily because the recent economic statistics in the fourth quarter of last year have been, for the most part, below expectations. Another example of that today with the retail spending numbers in from StatsCan for November showing a drop of close to 1% for the month. Now, part of that had to do with the fact that the price for gas and oil fell dramatically, and that had certainly a ripple effect on the economy. But car and truck sales slowed as well. So even though you had the kickoff of the holiday shopping season with Black Friday and Cyber Monday, and Canadian consumers in some cases were spending more, this could, again, have analysts lowering their estimates on economic growth. Doug Porter is the chief economist with BMO Capital Markets.
We're looking at growth of about 1.25% in the fourth quarter. We had that 1.5% before, so it's not a huge change. But the fact is 1.25% is pretty soft. You know, we would see normal for the Canadian economy as being about 2% or a little bit below 2%. So things clearly did soften up in the fourth quarter, and I would lay some of that at the feet of A, the uncertainty around trade, and B, the pronounced weakness that we saw in Canadian oil prices in the fourth quarter.
And even though the Bank of Canada is still trying to figure out a way to get interest rates back up to a neutral level, up from where they are right now, a lot of analysts are saying the Bank of Canada can't do anything with the recent economic statistics. That's a whole lot of weed. Canadians were buying cannabis in November to the tune of $54 million. It was the first full month of cannabis sales in this country, and Stats Canada did some tabulations, and they're actually going to do this on a monthly basis to show exactly how big of a market this could potentially be. Some say it could be worth upwards of $5.5 billion. Now, the Stats Canada tabulators did point out the fact that online sales were only available in Ontario, no retail storefronts available yet, so that could still skew the numbers lower, and there is still talk of a supply shortage, which could last for several years. Some big numbers in today from Tim Hortons showing that the company's menu offering changes in the later stages of last year started to pay off with more customers coming through the stores. The same-store sales growth at Tim's up 2.2% according to some preliminary estimates in from the company today. That was following a kids menu offering unveiling by Tim's. And considering the competitive nature of the Canadian restaurant market, Robert Carter of NPD Group says that's a big growth rate for an established company.
Tim Hortons today represents almost 35% of all restaurant traffic. So for them to grow by 2.2% is good news for this organization.
Tim Hortons' parent company today, Restaurant Brands International, also announced they've got a new CEO promoting Jose Sil, who's been with Burger King for 18 years. And also, they raised the company dividend by 5 cents per share. Stock was up by as much as 8% on the TSX. And as we go through the week here, we're also going to see lower gas prices here in the GTA, with the price of the pumps expected to fall to less than $1 per liter on the peak price as of Friday morning. That's according to market watcher Dan McTagg of Gas Buddy. What's happened is we've still got a lot of supply in the refined gasoline market, and consumers are benefiting from this. Of course, you shop around, and later in the day, in any cases around the GTA, we've actually seen prices at the pumps at the low 90-cent per liter price point. From the 680 newsroom, I'm Mike Eppel for City News.